For now, it's all about the Fed. What's up, everybody? Welcome aboard to Bubba's Daily Update. Always great to be here with you, and especially after a winner on the Stillers last night. But again, markets once again show that there's really very little to do. There's very little action. We had ups and downs, and of course, once again, the NASDAQ pushed hard lower, only to come back and get back near the unchanged line. Dow was a little bit heavy today, and I think that might have something to do with some trade war talk. Again, we don't believe in the trade wars. We are not concerned about the trade wars, but certainly the initial reaction in slow markets has shown that there might be some fear. The S&P was not down as far as the Dow was again. So that just shows you that there's a little bit more of an appetite for risk, believe it or not. And of course, the Russell was higher on the day. So when we look at the big picture, it's all about tomorrow. It's all about the FOMC. What are they going to do? We already see the 10-year notes are at 3.1. And again, our target is 3.5 to 4. And at 3.5, I think we start to see some issues and some problems with the overall markets. And I think that's when you start to see money come out of the equities, going into some safer haven assets, because of course there's a lot of people in this equity market that are over leveraged and can't wait to get out. And that's something that you'll see as we see. So what the Fed does tomorrow, and it isn't what they say, we know they're going to hike, it's how they say it, and it's the message they send going forward, which will be the important things to look for. In the meantime, again, very quiet. Oil is still trying to spike higher. We're back in that backwardation. This is more of a fear trade. You can hear the experts talk about it's got to do with Iran or this or that. Bottom line is it's being chased up right now by either shorts or by those that think that we're going to see these crazy figures that people are putting out there, like $95 oil or whatever. When you look at it, this is the perfect plan for those who made that big, ridiculous prediction. They're probably selling into this market, which would make sense. And of course, that's what they've done forever. The big banks do this all the time. It looks like we might have seen a possible breakout in silver. Had a pretty nice move today, so we'll see if that can follow through again. It's not just the initial move, it's then the follow through going forward. Gold is still churning in that range. It's not just, it is churning towards the upside, but it's still really just pathetically quiet and can't seem to get out. And of course, this could last for an extended period of time. The bonds were much lower, came back a little bit, still closed lower on the day, which again leads to higher interest rates. The dollar's pretty much flat, hovering around that 94 level. You can see the what's going on here. The common thread is everything is kind of just waiting, because all these asset classes are going to be affected by what the Fed does and what the Fed says tomorrow. The dollar, the bonds, equities, so that's all kind of floating here and waiting for it. So we'll see how that plays out. Again, I don't expect any major change. I think that pretty much the news is pretty much priced in, but you never know, because somebody could interpret something that they say to be something different. So we'll see how it plays out. Again, I'm still encouraging you to be patient, observe, wait for the right opportunity. In the meantime, grain markets were mixed again. Corn, the common, was higher again. It was lower, and then it broke midday and it came all the way back and closed on its high. Soybeans were up much higher, but did close higher on the day. Wheat was a little bit weak, but I think, again, grains are something you want to look to buy on all support levels. The meats are really just kind of turning except for hogs. Hogs broke again out to the upside, and now the October got near that 63 level. Again, I think they're going higher, but certainly if you're in, I'd make sure that you're hedging those positions underneath it. And Bitcoin was under a little pressure today, down about 3%. It's going to happen. We don't want markets to go straight up if you want a longer term move. Obviously, if you're trading for a quick move, you want to see a quick spike, or whichever side you're on. But at the end, we'll sit back, and if we're going to see a longer term rally, you want to see a better base built. We've got Nike's earnings after the close today. We'll see what those look like. I'm sure they'll be okay. I don't know if they're going to be as good as what's been priced into the market here. Again, they had the Colin Kaepernick commercial, and that was a big hit for them, so that will help their earnings. So we'll see how it all plays out. But again, the simple matter here is to be patient. This is where people get into trouble. If you really look at the markets on a longer term chart, they really haven't gone anywhere. So, you've had some big moves, and of course, we've talked about buying Square when it was 85. Well, now it's 94. It came all the way back down and rallied. We're starting to see some pickup in the steel stocks. But at the end, unless you're hedging, okay, it's much easier to wait and be patient because you don't want to get nickel and dimed out of your cash where you're trying to figure out which way it's going to go when it's really just going like this. In the meantime, this is Bubba's Daily Update. Todd Bubba Horwitz, and we will see you back here tomorrow. In the meantime, don't forget about our high school investing program at Patreon, patreon.com/Bubba Trading. And also don't forget to catch the Bubba Show every day at 4 to 5 Eastern at libertytalk.fm. Have a great day, everybody. Thank you so much. We'll see you tomorrow on Bubba's Daily Update right after the Fed. Have a great day.